Yeah, good morning, Juliana. In terms of the rationale, China has become the largest market for chemicals. So more than 40% of the global production manufacturing in chemicals happens in China. The China market is bigger than the US and Europe combined. And more than half of the growth in the next 5 years will come from China alone. So for a chemical company, a leading global chemical company, you have to play in China in order to win.
Clearly, that's the pull side as to why you'd want to expand your efforts there. But what about the push side? What's happening in Europe that's led to this decision?
Yeah, Europe is facing some challenges in chemicals right now. If you look at currently, production volumes in Europe are roughly 20% below the last year before Corona. If you look at, for instance, the United States, the markets there in chemicals have recovered to the levels that you had in the year before Corona, whereas actually Asia is well ahead of pre-Corona level. The key differentiator, so why is Europe lagging behind, is the fact that Europe no longer has access to the cheap piped-in gas from Russia. So the energy prices in Europe, now gas prices have stabilized around a 35 euro per megawatt hour, but that's still more than twice the level that it was before when we had the cheap-in gas from Russia.
Conrad, good morning to you. It's Karen jumping in. Some of these issues, when it becomes around production and having enough supply, really becomes sovereign issues. Do you think Europe is treating it as such?
Well, it's a very important point that you make, Karen. Europe needs a strong chemical industry because you cannot competitively make, for example, an electric vehicle in Europe if you have to import all the steel, if you have to import all the plastics. So in order to have an industrial base in Europe, we need to have the entire value chain represented. And chemicals are sort of the mother of all industries and are a critical component of that. So yes, we have to have a healthy chemical industry in Europe. That's crucial for us to continue in Europe our industrial activities.
The other big change on the landscape, of course, is AI and the amount of energy required to build out successful AI systems in the future. Could that be the killer app that you're looking for, that the money will be poured into this type of infrastructure, bringing down the cost of energy thanks to renewable solutions?
Yeah, I think that's an important point. So if you look at AI, we're talking about electricity. I think Europe is very well positioned if you talk about solar, if you talk about wind. I think for AI, I'm therefore not that concerned in terms of availability, in terms of competitiveness. What the challenge is for the chemical industry is that roughly 30% of our energy is electricity, but the rest of it is actually gas and oil. So we use gas not only for the boiler houses for steam generation to heat up our reactors, but we also in many cases use it as a raw material. And that's why for the chemical industry, cheap energy doesn't only mean cheap electricity, but also oil and gas, which is a bit different than what AI requires.